DTN's Todd Hultman is our market analyst this week. After seeing prices climb higher, corn and soybean growers went into last weekend with the potential for hot temperatures across the Corn Belt and a hopeful open on Monday. But for the bulls, the run was not to be. Both markets finished more than a dime lower to start this week. The USDA's latest progress report, issued after that close, showed the nation's corn conditions slipped a point in good to excellent categories, while 2/3 of the country's soybean crop was listed in those best two groupings. We talked with Todd Wednesday afternoon at DTN's offices in Omaha and started by asking for an overview of current conditions.
Jeff, well, of course, here in Nebraska, things are looking very good, but the wider view of, say, the Corn Belt, we've had problems from early spring rains in the eastern Midwest that have still shown up in problems recently. And of course, we have some expanding drought issues in the Dakotas, which are tough. So we're having our lowest crop condition ratings for both corn and soybeans of the past 4 years. Now, those have been pretty good years, so it's not terrible, but we are on the lower end.
So to what extent is the recent market movement in both corn and soybeans weather conditions and crop conditions?
I would say this time of year it's all about weather. We pretty much have some of the big picture ideas laid out already, at least a rough estimate of planting acres. So here we are facing a forecast which is changing week by week on us. As you know, last week we had a very hot, dry outlook that we were carrying into the weekend, but then we show up Monday morning, we've got a very wet forecast, so we're having more subdued prices this week.
That corn rally that we saw last week, do you get the sense that there was a decent amount of farmer selling or no?
No, I don't think so. Our cash corn price nationally is averaging about $3.40 right now. That's just not really very good incentive. If we go by last year's cost of production from USDA, $3.85 is about the break-even bar nationally. So there's not a lot of incentive yet to be moving a lot of corn, unless, of course, you have to raise cash.
Previously, the decline in the soybean market was largely pointed to in Brazil. The real versus the dollar and sort of the relationship there, can you speak to how that's impacting exports, corn, soybean prices, et cetera?
Overall, corn and soybean prices between both the U.S. and Brazil have been fairly competitively close this year, and that's a bit of a surprise because we're having record harvests of both corn and beans down south. Now, a month ago, we had a JBS-related scandal which knocked the price of the Brazil's real sharply lower overnight. But local prices of corn and beans in both countries actually reacted very quickly to that news, and they're back to almost an on-par basis.
Last Friday's June crop report, any lasting takeaways from that?
Really wasn't. Not too many changes were made in the June report, as is often common every year. They did bump up the corn estimate and soybean estimate for Brazil, which I think most people were expecting. That Brazil's had very good growing conditions this year.
Let's talk about wheat for a second. It's been a lively market. Why?
It sure has. Well, first of all, we have to remember we started this year with the lowest all-wheat plantings for wheat in over a century. And so that was just to start things off. And then we have drought hit the Dakotas and Montana and possibly the southern Canadian prairie a bit. So we have a genuine bull market there now in spring wheat, but in the winter wheat contracts, the Kansas City and the Chicago, basically just seeing prices chop around in a low sideways range, not showing a lot of lift from this spring wheat rally.
Federal Reserve noted today it would try to raise interest rates. Is this a big deal?
Turns out that it was not a big deal to the market today. The dollar stayed fairly neutral. One of the things that came out before today's rate decision, our consumer price index dropped again for the month of May. That's the second drop in 3 months. It just tells me that we do not have a very strong, exuberant economy yet. I don't think it really supports much strength in the dollar right now, and that overall is really good news for our grains.
June 30th acres and stocks report. What are you looking for?
The big concern there is going to be on soybeans. I think everyone is content that we're going to have fewer corn and fewer wheat acres. We may even have a little more of a drop in corn than expected because of that wet spring that I was talking about. But the big question is soybeans. 89.5 million was the March estimate. That's a new record high for soybean plantings. It could go even higher than that because of the wet spring problems we had for corn. So that remains a big bearish concern for our soybean prices.